Welcome, everybody. Welcome to Hurley Investments Market Commentary. My name is Kevin Hurley. I'll be with you tonight. And I'm going to start off tonight a little bit different. If you take a look at the screen, my main question comes down to where will the S&P end November 2019? That is my question. Where are we going to end November 2019? If I was to ask this group, what would you tell me? I was going to ask you guys here, what would you tell me? We're going to go higher, okay? How much higher? 2.5%. Oh, I love it. So it's interesting that you're saying what I'm saying because in all honesty, that is my question tonight. And if I can go ahead, I'm going to bring up the S&P here. And let's annotate this. Let's do an annotate. I found it interesting because I kind of feel like Kramer, to a certain degree, is stealing my stuff, right? If we take a look, and I'm going to do a wide one. If we take a look, we went from 23.4 up to 29. We went from 27.26 up to 327. I'm going to take the lows, 28.22 up to 3,021, and it seems like we hit the 26.65 up to the 3,097. So let's talk really quickly. What do these 1, 2, 3 pullbacks all have in common right now? What do the 3 pullbacks all have in common? They look about the same. Well, that's not necessarily true. We have like a 7.9% pullback, an 8.4, a 5.6, respectively. So I'm not going to say they all look the same. That is not correct. What can you tell me about these 3 pullbacks? Because I think there's something clear as day to see. A couple question marks came in. Some people don't know. They're in a horizontal. I don't know if I would call it a horizontal line either. In all honesty, if you did a horizontal line, you'd go from here to here to here. If anything, I would say you're probably looking at higher lows and higher highs. So it is jagged. 29.54, 30.27, 30.21, 30.97. You have like 150 points. So I'm not going to agree with the horizontal trend line because you had that 150 points. I would disagree with that. The comment was made, it looks like a pennant. I might disagree with that one as well. A very interesting comment. Lee, you're doing good today. In about 2060, but no one knows. You mean 3060? I thought you were talking about 20 year 2060, the bull run might end, which is kind of funny. But the comment I thought was interesting from Lee, no one knows. Lots can influence it. And that's really where I'm trying to go with this, because I kind of thought it was funny that we had Kramer, for all intents and purposes, I felt like Kramer stole my thunder today. Here I was preparing all this, and I just felt like Kramer stole my thunder. So let me show what I'm going to do with this here. I want to put this in here. My question was, where were we going to end our November? Because I put 2.25%, 2.25% is what I've been saying. And I'll be honest with you, I would have thought we were going to run into the end of the year. But if I bring up November, I'm basically looking at, I don't know, a 2980 up to 3097, which is a little bit over 1%. Well, let's do the math. Let me figure that out. A little bit over 3% right now, but 2980 minus 3097 is 111 divided by 30 is, 3.9. So we maybe have 111. Let me do that one more time. 2980 minus 3097 is equal to 117 divided by 30. It's about 3.9. 3.9, I'm going to say we're still bullish, but I'm really worried about our overbought, excuse me. I say that wrong all the time. Overbought. And we stayed overbought on Williams percent R, but I don't have it in today. So it's a little confusing for me. I went so far as to say, where's the one I was looking for? Let me start off with Warren Buffett's. Warren Buffett has $128 billion in cash to burn, and analysts can't figure out why he isn't spending it. Any ideas why he might not be spending his money right now? Why might Warren Buffett not be spending his money right now? Stocks are overpriced. Now, I don't know if I'd say overpriced, but they're fully priced, right? They're at a full valuation. S&P usually sits at 15, 16. Ida could come to me and say, Kevin, we're above 17. We're like a 7.4 right now times future earnings, which would mean she's right. They're slightly overpriced. I might say we're full valued. Interesting, he repurchased 700 million worth of shares for the quarter. And it's the reason why Berkshire Hathaway basically took a bit of a hit. I had this out here and I liked the chart because I found it interesting to see how his cash has been growing, literally from 20 billion in 2009, when he should have had a good opportunity to pick up quite a bit, up to 120 billion where it is right now. Berkshire Hathaway is just up 7%. In fact, it's going to be down even more from this article due to a couple companies they own that have blown it. So, it makes you wonder. It makes you wonder. Where is he going to go with it? Where is his next acquisition? Where's the other one that I wanted to show? With a market at record highs, these are the most loved stocks on Wall Street. I pointed this out because if you go to what they deem the most loved companies, I took a peek. We had Visa, we had Facebook, we've had Citigroup. So I basically considered 1, 2, 3 isn't bad. We then found, where's their chart? We then found some other ones here, but they really talked about Visa, MasterCard, and Facebook. That was what the article was going on. I thought that was pretty interesting. All right, so last week we had a pretty good week. Obviously for Hurley Investments, we were up about 5%. Pretty neat to see us at a gain of about 1.8 million for the year. Of course, that really comes from Apple, Baidu, Disney. A little worried Disney's not holding its gains right now, but I would figure for a day or two it might not hold its gains. Disney Plus comes up tomorrow. Sometime by the end of the week, if we have any end of the week numbers on how many join the Disney Plus or Disney bundle, obviously this thing could be up to 150 extremely quick. It's kind of a no-brainer, right? So, as I looked at last week, a pretty decent up week, held us up pretty nicely. I am worried about where our markets are going to go. If I was to look at stocks and give you a couple of thoughts. Apple, shocked. It's still going higher, but I have a target price of 280. So it doesn't surprise me too much yet. But boy, for some people that had the longer term Apple bull call, I'm going to go through with that tomorrow. $1,500 of profit is pretty tempting to pull the trigger on that one. Baidu, $3 pullback. Expect it to run to 135 by end of year, but last time fell back down to 100. Visa, dang it, sorry. Visa, run to 200. Damn it. Disney, good earnings, Waiting for Disney Plus numbers and for analysts to understand 2 more billion-dollar plus movies are coming out. And shocking that if I read it correctly, and I can't verify it just yet, but that Frozen is the all-time quickest sellout of pre-order tickets ever. Really looking for a price target of 120. Where's some other ones that we're looking at? Ford, back to $10. FCX, back to $12. I'm going through, let me see what else. How about Boeing? Boeing, nice run, killing a rumor and being more positive than the airlines that own the 737s, right? What else would I go through? Bank of America. Really like Bank of America. Holding 33 and run to 35 end of year. See what else I have on here that I might use. Facebook. Dang it, Facebook. I am expecting a run to 228 or all-time highs. Don't understand why it's not there, especially with their earnings. Absolutely unbelievable. Zions Bank, another bank one, right? $60 by next quarter. And I mean, that's about where I'm sitting. I'm a little shocked at a couple things, but instead of BSing you guys and saying, hey, I know this, I know that, I would feel more comfortable giving you an honest opinion that I'm not sure where everything's going right now. And the reason why comes right back down to Kramer stealing my thunder. Is it time for a little pullback? It has been in the past. And the question I asked, what do you know or what do you like about the charts? Except for one day, the 200-day has held every time we've seen a bounce down lower. Which means the question is, are we are we looking at one of these little ones, right? Just to get off of the overbought, excuse me. Will we go down and test the oversold? And I'm going to tell you, I really see clear sailing through the end of the year. People ask me, well, why am I looking at clear sailing? And I think this was Ida that brought this up. Hidden intervention, political motives driving Fed policy. She talked about the repo, the repurchasing agreements on the Federal Reserve, repurchase agreement holdings, repos on the Federal Reserve. So the Federal Reserve has provided support for a repo market, but the support which has caused an uptick in the Fed's balance sheet of nearly $200 billion. So if you read that the uptick on the Fed's balance sheet is $200 billion, what does that remind you of? What would that remind you of if you have an uptick of $200 billion on the Fed's balance sheet? especially let's say over the last 2 years. The last 2 years, if we have an overpriced, what does that make you think of? Excuse me, a balance sheet growing by 200 billion. Bingo. They raise their balance sheet when they're dealing with a crisis. So as I read through this, I'm going to suggest you do it as well. I don't know what the crisis would be unless they're trying to ward off or prep for something in Europe. But most recently, I read that that the conservatives are going to join so that Britain can get out of their European Union agreement. Heck, in all honesty, we might be the first person to have some type of trade agreement in place, in which case that would boost our economy. But they've called it a hidden intervention. I recently identified 3 categories from the Federal Reserve balance sheet that play a significant role in the current policy: reverse purchase agreements, other liabilities and capital, and non-reserve deposits. The sum of these 3 categories approximates the discrepancy between the total quantity of base money and the size of the Federal Reserve's balance sheet. The Federal Reserve is using assets and accounts in these categories to manipulate the quantity of base money, thereby preventing the quantity of currency in circulation from increasing. Pretty interesting. But this would describe or explain why we don't see a run on homes right now. Interest rates has gone down and we're not seeing a big run on homes. Lower interest rates are not driving our housing market. Part of me wants to sit here and go, bad timing, pal. Maybe you should have held off on the last true rate cuts and did it April and June of next year. So kind of interesting, at least some things that I've thought of. So if we're looking where the markets are going to end up this week, I would say higher. I'll be honest with you though. I'm not 100% sure. So I'm going to say higher-ish from where we're at today. No, we can't. Technically speaking, I actually don't know. I'll be honest, I don't know. If you look technicals, we are approaching the overbought. We do have a wider than average spread. When you see this average spread go higher, we have usually made some pretty quick corrections. So my decision is, am I going to protect for a pullback before a Christmas rally? Identical chart on the S&P, except we came off the overbought. Identical chart on the NASDAQ. Obviously, they usually have a little bit bigger spreads here, but the look of coming back to a standard deviation of the 50-day, pretty big red bars going down, some big up white candles coming back up. I mean, that's the short and the skinny of it. As for what's happening this week, not a whole lot. Nothing really stands out for earnings. Friday, we have retail sales. Not that I ignore retail sales, but it won't matter. What really matters will be Black Friday. All the sales are going to happen, how much earlier they're going to happen. It's just going to be a little bit insane. Nothing international stood out to me for me to mention to you. No real earnings coming up except for Target in a week. I would expect a run from Target. I would expect Target trading right now somewhere around that. Let me get Target up. Target trading at 110.45, had an up day today and a down day. I would expect Target to get up to that 115, 117 level pre-earnings again. Just making that run up to the highs it was at previously. Goldman Sachs is buy Under Armour on the dip. Kind of interesting because we also had a Seeking Alpha. Under Armour shifting to the offensive. I do like Under Armour. Even though they have an investigation, their earnings was better, there's nothing that tells me that this doesn't have significant upside if you're fundamentally looking at a stock. I went through Warren Buffett with you. Paul Tudor Jones sees the S&P plunging 25% if Warren's elected, jumping another 15. Right? Is it 15 or 5? Let's move that. 15 on Trump. My only comment to this one is, duh. Baidu, really nice to see their beats on strong video streaming and still interactive artificial intelligence. But interesting if you want to see what I'm seeing on Baidu. It's just way oversold and too cheap. What stock market's like. I also found your income tax brackets for 2020. Just something that I'm paying attention for when I'm looking at selling off or trying to make sure that people aren't stuck with a big tax bill. And my last one, once it starts to panic, the yield curve is valuing stocks come back and may crown the winners. Remember the yield curve? Oh, what, April? It always predicts a recession. And please go back to listen to what I said. Yeah, on average, it's like 23 months. It could be 3.5 or 4.5 years. What I really wanted to tell people is, chill out. For crying out loud, people, chill the hell out, right? And it's interesting. I don't know Patty Dome, but wow, pretty interesting to see what's happened, and pretty interesting to see how our stock market, in all honesty, is not really anywhere close to a recession. Please feel free to read through the political motivations driving the Fed policy. I found it a very interesting read. And with that said, any questions you guys have, or maybe we'll end a little bit early today. Any questions you guys have? Of course, Lance has a question. Would you get into Boeing? So the easy money on Boeing will really be made from 330 higher or from 380 to 400 to the downside. So would I get into Boeing? The answer would be no. I would not be looking to get into Boeing here. I'd be looking for it closer to one of those other points. In all honesty, if you're going to get into Boeing around 380, you do so with protective puts. If you're going to get in at 330, understand you can go down somewhere between 330 down to 317, looking for a bounce higher. So you ladder into your position. If you wanted to own 500 shares, you might start off with 300, looking for a better price to buy the other 200. Or if you're going to get in at 380, you get in at 380 and you add 4 long put contracts to your 300 shares. You're doing nothing more than playing past performance on Boeing. It really could have significant upside. So if you were to ask me if I had put a short call on it, the plain answer would be, heck no. Hopefully that answers your question there, Lance. Am I bullish on Target? I am. I'm bullish on Target, probably Walmart, going into the selling season. It had a great run. I guess it was up to 114.83. I really would, calculation-wise, to 115 to 117. I think it could have a pretty good run into a possible earnings, and they seem like they've done everything right. So this would be another one. I'd have no problem getting in now. I'd look to add protection on Friday, probably out to a December monthly, and I'd want that at around 115. Hopefully seeing these guys go to 120 to maybe 125 after earnings, running into a pretty healthy Christmas season. I've got some positions on at 107. We've had some covered calls to take some profits out at 110 for a 5% profit almost in 4 weeks. I've got some other short calls at 115. But what I'm looking to do at the end of this week is make sure I've got no short calls on, adding long puts, and running these guys through earnings on the 20th, which is next Wednesday, I believe. I'm pretty sure that's when their earnings is coming up. Good question, Ida. Hopefully that's answerable for you and helpful for you. If we go back to last week's trades that we put on, you might have gotten out of all of them today. So a lot of what we talked about last week on the 4th, where did I put that at? Earnings. Apple, longer term bull calls, 260, 280 to get out of. Your leap long calls on Facebook, you could have gotten out of profitable. Microsoft profitable. You can close more of your Baidu long calls if you wanted to. I might look to do that tomorrow. Pre-earnings leaps on Baidu and Disney, all of them are profitable. So just as a heads up, don't hesitate to take some profits. You don't have to shut everything down, but possibly take 25% off. Give yourself the opportunity to still be in it. Maybe see if you can't create a risk-free trade. If you had 8 contracts of Baidu, you might be able to take 5 off and have risk-free trades on your last 3 contracts. You don't have to worry about taking them off. So yes, I'm going to start an advisory thing, but it will most likely start beginning of next year. And for people that are that managing money for, it'll be free. I know a lot of my clientele is from the student base, and that you guys like playing around with your own money. I might suggest you start off with a $25,000 account. I would not be doing my trade findings and adjustments on a $1 million account. It's a lot easier to do these with money you can afford to lose. What I mean by that is, no, we're not looking to lose money, but we are being smart and prudent, saying, hey, I would not be placing, I'd be willing to do it with smaller amounts of money that you can sit through some of the downturns, the dollar cost averaging, the adjustment process without panicking. So pretty interesting. And Ida, you'll keep getting it free through Christmas. Don't worry. God, I've known Ida since what, 2004, Ida, with spread trade systems probably. Are there any other questions you guys have? If not, please have a wonderful evening. We'll do trade findings and adjustments tomorrow. I'm looking at a couple interesting four-legged trades and a couple opportunities on earnings coming up here in the near future. I don't see anything that's coming. All right, guys. Hey, have a wonderful evening, and I'll talk with you again soon. Bye-bye.